Hello, investor and trader. Welcome back to another episode. So, Zoom just released earning report, and their stock tanked more than 10%. Their report is not that bad. I mean, they beat earnings in terms of revenue and stuff like that, but the stock got hammered. So, in this episode, I want to talk about a little bit about fundamentals and mostly about the technical and where do I see Zoom going from here, from my honest opinion. Now, just straight up, I would not own Zoom for investing. However, I would swing trade this and day trade this because Zoom makes some pretty good move every single day, or mostly every single day, like up 2, 3, 4, 5%. So this is very fun stock to trade. But for investing, heck no. And I explain why. Okay, so if we look through the earning report that they released today, the first thing you can see is 3 bullet points. This is direct from the website. So they said 54% in terms of revenue year over year. That is pretty damn good, right? And then other metric. So if we go to if we scroll down, the first thing you see is the balance sheet. They want to show us, hey man, we have a lot of cash in our balance sheet, over $3.1 billion, which is pretty damn good. And total assets 1.6 over 1.8 liability. That's like 2x, 3x. So very strong balance sheet. So that's the first thing they want investors to know. We are not going to go bankrupt anytime soon. But why does the stock tank more than 10%? We have to look at other metric, or at least I would look at other metric to see, okay, what's going on here? Now, the PE ratio here, that first thing I noticed, a red flag. It's way too high, or way too of a price premium. 120 PE? Dude, a healthy tech stock PE is around 15 to 25. In this bull market, maybe 25 to 30, but not 120. Okay, next metric that I see a red flag is price to sell. 31, that's way too high. Normally, I like around 10 or below. The lower, the better. You don't want more than 30 or more than 20 on that. That's way too. It's just way too high. You know what I mean? Look at the market cap, $102 billion. Meanwhile, do only $4 billion in revenue. That's how you get the PS ratio. So that's 2 red flags right there that I see. Now the next red flag that I see is right now we are in a major bull run. So let's go to the QQQ, which is the overall index of the NASDAQ. As you can see right here on the daily, it is all-time high. Not that scary when you go to the daily. Now let's look at the weekly. Zoom out a little bit. Okay, stochastic RSI is getting a little too high. Remember how I told you when you swing trade or buying a stock, we want these two metric to be low. The lower the better, right? Now this is where it gets really scary. The monthly chart. Look at that monthly. 82 RSI and 97. Dude, the max is like around 100. It's almost maxed. So what that tells you? A correction or a pullback of the market is coming. And I have proof for here to show you guys based on statistics of the stock market. So I posted this a couple days ago. So you look at the overall market of the return from 1928 to 2001, pretty much 100 years, right? We can see September, 50 months out of 42 months, or out of 100 months, or whatever, 92 months. The majority of the month is going to be red in September. On top of that, what is the average pullback percentage? It's aroround 5%, 4.5, 5%. Now this is the overall index, okay, the S&P, not individual stock. Now you can see right here too, in terms of percentage each month. So you can clearly see that September most likely going to be a red month. Now, if you recall, last September, we had a pretty good red month. So let me go back to the daily and zoom out a little bit. Remember that right there? That was a pretty good pullback, around 10% or something like that. Now, if we go to zoom around that time, see what happens. Sorry, it's wrong ticker symbol. Right there. 408 all the way down to like 300 something. That's a pretty big pullback too for Zoom. So the point I'm trying to say is, Zooming give out good numbers, the stocks tank. Can you imagine Zoom give out bad numbers? Oh man, this thing can probably tank 15, 20% plus easily. Plus a correction on its way, this thing can go way down. Now if we zoom out a little bit more for Zoom on the weekly chart, we can clearly see this moving average right here slowly sloping up, the 100 daily EMA right here. So I also see a support right here too. So let me draw this right here. where the previous price action, like right here, because the previous support around 280, 270, also down here, over here too, in the past history. So therefore, this stock can definitely hit between this price range, because you can see that weekly, this is still sloping down the stochastic. Now we go zoom out on a monthly, right? Same thing right here, around 280. Even the stock pullback at 280 is still a relatively expensive stock. Hope you guys are aware of that. Okay, so today I did not catch Zoom. I was watching it during pre-market, but I noticed something right here when I watched. Okay, right here, this thing tanked quite significant right there. No pullback. And then this right here, I thought 220 was a good bounce, but no, I was waiting for the confirmation. But it just kept on dropping lower and lower and lower. I'm like, you know what? Nah, I'm not gonna catch this knife at all. I don't see no bounce, and I'm glad I did it. You can see a bull trap here, and then more bull trap here. Now, it took me a while to learn these bull traps. It just experience over time. But you can clearly see my first bull trap experience right here, where I took a huge loss. I want to share with you guys. This is based on experience. So let me zoom out here and play this footage.
12,000. This is going to be a very big decision because I am down 12,000. My 5-figure loss, first time in 3 years of trading almost. If I don't sell it, this stock has potential to drop another $10. If it does drop another $10, I'll down another 10,000 because I have 1,000 shares. So cut my losses. I'll get it back. It sucks to see a 5-figure loss, but I'd rather have a $12,000 loss than a $20,000 loss.
So you can hear the sound of my voice, right? It's really depressing when I hear this. But this was happen to Domino's Pizza for me catching this earning knife or falling knife. So let's go back to Domino's Pizza around July 20 something, 25, 26, 2017. To give in perspective, around that time, you can see right here, right around that time, I was a college student. So for a college student to lose $10,000 in a couple of days, it's a huge hit. It got me emotionally for a little bit. That $10,000 could be my whole year tuition, but instead I paid to the stock market. But I'm very happy that I did because, hey man, when you lose that big, you wised up pretty quickly. So let me go to why DPZ during that time, how I lose that first 5-figure loss. And from that day on, I learned slowly how to catch these knife and how to prevent myself from getting that loss. Now it's right here. So let me zoom in to share with you guys what happened. Just like Zoom, right? Earning comes, massive red day. I got in around 195, something like that, and I sold it around 182 right here because it kept falling. I have 1,000 shares, right? Every dollar down is $1,000. Eventually, I got caught my loss because I couldn't bear the loss anymore. The point I'm trying to say here is, if you want to catch this knife, you have to wait for a confirmation. You don't just catch, or else you're not gonna get your best return, even though you are an investor. You can see for the past couple of days, it keeps falling, just like Amazon, right? Remember Amazon just released earnings? Right here, right? Gap down, bounce. It's still going down, right? And imagine you try to catch that during that day where it tanked right here. During the aftermarket, you be down right now. In fact, you still be down, although Amazon had a big run. From here to here, that's a pretty good return. You see what I mean? So therefore, for Zoom, don't be anxious to jump in, even though the stock tanked more than 10%. Remember, the correction is around the corner. This is going to tank even more. So in other words, be very patient. Watch the overall market. Is the overall market right now is like overpriced? Is it just have a little correction? Because it does make it different. Right now we are at all-time high. So guess what? When this thing tank, it's gonna pull Zoom with it. Now, if this, just pretend we just had a correction down to here, right? Down to here, where the QQQ daily is stochastic and RSI is below 30, and Zoom just tanked, 10% like it did. Guess what? If QQQ decided to bounce back up, right? Because like I said, we are pretending QQ is down here. Guess what's gonna happen? It's gonna pull Zoom up with it because overall the market is going up, right? So my highly suggestion is, if you already, oh, let me zoom out here. Well, first of all, I need to make this clear. Now, I'm not making fun of any investors here. I'm just being honest. But we can clearly see right here, right? Oops. Uh-oh. Right here. Let me draw this box right here. We can clearly see that the people that bought right here are under the water now, known as bag holders, right? So every single time when Zoom tried to get above 400, guess what happened? Pushed down. When every time Zoom going to get 500, pushed down, because these people have been holding Zoom for a long time. They just want to break even or get out, right? So keep that in mind. There's a lot of resistance here, and also keep in mind that you are paying a premium for this stock in terms of its fundamental. Okay, that's all I have for today, and good luck on your Zoom investments. Wait for that reversal signal, and then decide to enter the position. I highly suggest somewhere around right here to start a small position or average your cost down. Don't average your cost down on the first red day. Oh, sorry, I keep going. The first red day is a major one. Do not buy on first major red day, especially a high flying tech stock with a PE over 100. Because first red days, guess what happened the next day? Gap down. Guess what they would normally say? Gap and go. What do I mean? Gap down and continue to the downside for a couple days, a couple weeks, until it hits near the support, and then look for the reversal. Boom, you ride the uptrend. All right, see you guys in the next one. Bye.